Hello traders, welcome to the channel. In this video I will show you an example of one of the setups that is working really well for me currently. And this setup is failed breakout. I took this trade yesterday on Friday 11th of March 2022. The trade was on a DOCU. Yesterday DOCU shares plummeted more than 20% after the company issued disappointing revenue guidance for the full year. The overall broad market picture was still bearish. We were still downtrending. We were still below all the short-term moving averages on both SPY and NASDAQ. However, we did gap up pre-market a little bit. S&P was up 0.66% pre-market. The Qs were up 0.92% pre-market. And I found that actually on gap up days, when the broad market gaps up, especially gaps up significantly, that's when the best bull traps and breakout reversals happen. So I was watching DocuSign right out of the open. As you can see, the 1 minute chart is at the top left. The DocuSign in the first minute sold off. It went down. However, in the next couple of minutes, it started pushing towards the top of this 2-minute opening range. The idea of the setup is to short into the breakout. The logic is that it's one of the weakest big cap names in the market right now. It has already done over 3 million in volume. Plus, the market is weak recently. We're downtrending. The idea is to get into the move up. If it continues going against me, then the trade is disqualified as a failed breakout, and you can just get out and move on to the next trade. However, if it does reverse, all those longs, all those breakout traders, all the bulls that got caught into this move, they would start selling, and this will result into a very nice move down. And that's what I did as DocuSign broke out. I put my order in for 15 shares. I'm trading really small size right now. I'm trying to risk about $10 per trade, so I chose to go in with 15 shares on DocuSign. However, only 7 shares were filled. So at this point, I was short 7 shares. So I started moving my offer down a little bit, and I got executed for the rest of the shares. I'm going to fast forward the rest of the video for you. What I essentially ended up doing is just putting in my bids. I am a scalper, and this is how I like to trade. I like to pay myself as the trade works my way. At first, I covered just 3 shares, then 4, then another 4. Then I had 4 shares left, covered another 2 here. However, for the final 2 shares, my bid, the price did not reach my bid, and it started reversing. And personally, I'm not a fan of holding through the pullback, so I just decided to cover the rest of my position here. And that's it. A very simple trade. The important thing to know about this particular setup is that you need to have the courage to sell into this move up. I know it's uncomfortable, it can be scary, plus I feel like a lot of trading education and the trading gurus tell people that you need to wait for some sort of confirmation. However, when this trade confirms itself, it may already start reversing, and you will not have such a good price, and you might get shaken out of a good trade, even if you guessed the direction correctly overall, just because you got in later at a much worse price, you can get shaken out of a good trade really easily. Or you have to use really wide stops. And I wouldn't recommend that either with this particular setup, because you want to be out quickly. If you're timing your entry on a 1 minute chart, then you should also time your exits on a 1 minute chart, and it should be within minutes, ideally, because this is a short-term price setup, and the predictable movements that this setup offers, they are also short-term. At this point, DocuSign could have reversed and could have tested the daily high again. Or it could go sideways, or it could continue going lower. I don't know. What I know is that those failed breakouts, they usually have a short-term reaction, short-term selling that follows. And you can capitalize on those short-term price movements. For me personally, it's much harder to anticipate and predict a large move. It's much easier to anticipate and capture a small move. So this is basically the logic behind this trade. And as you can see in this scenario, DocuSign actually ended up pulling back a little bit, but then reversed, broke the daily low, and continued grinding lower for the rest of the day. So to just quickly summarize, the entry for this setup is shorting the breakout. If the breakout continues, or if it stalls for a minute or two and then continues, then this setup is invalidated. So you can safely just get out. And if the failed breakout occurs, which in this bearish market it's likely to occur, then you just scale out of the trade. And yes, that's it. Thank you everyone for watching. If you want to see more videos like this where I break down different setups that I trade, the logic behind those trades, how I think about them, how I approach the risk, how I scale out of the trades, please subscribe to this channel, like this video, leave a comment, and I will see you in the next one.